take a look at Nvidia, up almost 30% since August 5th as part of a larger tech rally that's brought the S&P 500 index up over 7% in that same time frame. Taking a look at Nvidia shares right now, up nearly 0.7%. The big question, was the summer's brief pullback a blip, or was it a sign of something further in terms of weakness for the tech sector? Our very own Josh Schaefer joining us here with more. Josh, such a boring morning. Thank God we have you here to talk Nvidia with us. Something finally to cover.
I've been refreshing the Bureau of Labor Statistics page for 30 minutes, Maddie.
I know.
A lot of fun waiting for those job revisions. But yes,
Nvidia, yes,
over the last couple days, I've been asking strategists about the rally that we've seen in tech and the rally that we've seen in Nvidia, and if that is supposed to be worrisome again, right? We've had a lot of conversations over the past year about, well, this rally is only happening in tech. It's 7 stocks leading the stock market higher. That's not a reason to be bullish. That's not a reason to be positive on the current rally. But what strategists are pointing out is that it's more than just tech that has been rallying. Yes, tech has led us from that August 5th bottom, but if you go back over the last month, a lot of stocks have been doing quite well. So our friend Kevin Gordon over at Charles Schwab highlighted a chart to me showing that about 58% of companies in the S&P 500 have been outperforming the index over the last rolling 2 months. This is the highest level that we've seen in the last 2 years. So you can see that big tick up that you see at the end of your screen on that chart. That was the amount of companies outperforming the S&P ticking up over that last month. Another interesting chart that our friend Brian Belsky over at BMO Capital Markets highlighted that was interesting to see is for the first time in about 2 years, you're looking at the rest of the index, not the Magnificent Seven, not the Nvidias, Alphabets, Apples of the world, actually outperforming the Mag 7 this quarter thus far. Largely what this tells strategists is this is a healthy bull market. This is what you want to see confidence that stocks are going to continue to chug higher. Largely, people are pointing to the fact that we still have solid economic growth. Yes, we're talking about those BLS revisions today, but still, I think as economists just said to you, we're looking at potentially a soft landing scenario here that would help cyclical areas of the market, markets outside of tech. So largely, the rally we've had, yes, we've talked a lot about tech, but other areas of the market also participate.
Right, and I think that that's kind of been the conversation here, even just going back over the last 12 months, right? Or maybe the last 7-8 months, if we want to get more specific. But I guess just in terms of, I think the question is how long that rally is going to last, and more specifically, maybe what that upside looks like within some of these cyclical names or cyclical plays, right? Just because of the fact that I feel, at least, there were a lot, comparing the commentary that we're getting today, comparing that to what we got maybe just a month or two ago. There was a lot more questions about tech valuations, a lot more bearishness, maybe that we could see some pressure surrounding tech. And now it seems like people like more of a broad basket of things, but now they are still seeing reason to own tech and buy tech at these levels. So I think the question then is the leadership, maybe how that shakes out, and maybe the participation across the board rather than all of these names instead of tech.
Well, and I think we're having this discussion a week before Nvidia earnings, and that's going to help you figure out that answer a lot, right? Does Nvidia earnings bring back sort of more FOMO into the rest of tech? I don't think yes, we saw all of these tech stocks rally over the last 2 weeks, but as you were just pointing out, Shauna, the fundamental story had come a little bit in question over the last couple weeks, right? After earnings, people are wondering if these companies are spending too much. Nvidia earnings don't answer that for you. The next couple weeks aren't really going to answer that for you. The Fed probably doesn't answer that for you. You need to get to the next earnings season to figure out if the companies on your screen right now, like Microsoft, Amazon, Meta, Alphabet, is their AI spending coming back and producing profits that is going to make Wall Street satisfied? That was a looming question we had 3 weeks ago, and we still don't have the answer to. And so I think a lot of people are saying, okay, we've had this rally now. We got to a point where we felt like there was money, potentially easy money or quicker money to earn in tech, and now it's back to wait and see. And so if you want to find other areas where people haven't piled into, that's when you get into those cyclical names. And maybe there's a little bit more room to run there, because remember, it's also a conversation of trying to outperform, right? And so, yes, the tech stocks could still do well, but if there's a chance to outperform elsewhere, maybe that gets us back to our 493.